Hi there, I'm Jason Bates of 11FS and welcome to Fintech Insider News on Air. That's a bit of a mouthful. It's our weekly live video cast. I guess you're used probably to hearing of us on the podcast, but this is where we actually get to have a chat, talk to interesting people like Valentina, and also respond to questions that you might put to us on Twitter or YouTube. So if you hear something on here you think, no, that's not right, or I really want to make my point, make my comment, then please do reach out to us on Twitter at 11FS, at 11FS team actually, or find us on YouTube and leave a comment there and we'll get to that. But of course, I'm not here on my own. I'm here with Valentina Kristensen, Director of Growth and Communications at OakNorth.
Hello.
Who's had a bit of a busy week.
Yes, yeah, it's been a very busy week. I think, UK FinTech Week, I'm kind of FinTech'd out, I think, almost.
Is that possible?
Yeah. I mean, after Innovate Finance, which was great on Monday and Tuesday, I went to a few different sort of lectures, one with Jane Angadia from CEO of Virgin Money, and then we had the Treasury's International FinTech Conference today, where our CEO was giving a keynote. So, yeah, I've met some fantastic people. It's been a very, very busy week, and we put out our annual results yesterday as well.
Yeah, so tell me about your news about profitability, because profitability and challenger banks aren't words that are used in the same sentence very often.
Profitability and fintech, definitely. So basically we reached cash flow break even in month 11 of operations. That was back in August 2016.
So break that out for us. What is cash flow break even?
So that's essentially where on a month by month basis you are that you're sort of putting out as much as you're taking in.
Okay.
You're not sort of making money, but you're not loss making.
Okay.
And to reach the full profitability, that was 2017 was our full year of doing that. So we made 10.6 million pre-tax profit in 2017.
And does that take into account what you'd spent already?
Yeah, so that's where we've repaid all of our accrued debts, accrued losses before you turn 2 years old.
Wow, so I'm sure you've had lots of questions as to how do you do that?
Yeah, I mean, I think it's a couple of things, really. I mean, we've taken a very frugal approach since the very beginning. I mean, you've been to our offices. There's nothing fancy about them, but they function. And I think that's definitely something that Rishi and Joel, our co-founders, have installed from the very top, from the top down. I think another part of it is the fact that about a third of people within the company are actually shareholders in the business. And what I mean by that is, obviously a lot of fintechs will give employees potentially, bonus equity or share options when they join. OakNorth, in addition to doing that, gives employees the chance to actually buy equity. Mm-hmm. And it's a totally different thing, I think, a shift in mindset when you put sort of your own money into the business, as opposed to maybe putting it on a deposit on a house or, for a holiday or whatever it might be. And I think that does make you negotiate just that bit harder and care that much more. So I think it's a combination of things. It's being frugal, it's negotiating on pretty much everything. And then we've also obviously used technology, so being fully cloud hosted has enabled us to scale very effectively, but keep costs down as opposed to having multiple servers.
But I guess you also found that niche in the market in terms of good, sizable businesses that had great fundamentals that needed to borrow cash that were in some way a little small for the big commercial lenders.
I would say actually it's not even that they're a bit too small, because the loans we're doing are sort of between $500,000 up to 30 million. They're scale-up businesses, rather than sort of start-up businesses. They're profitable, they're cash flow positive. It's that typically what you find in the market is that it takes, we hear, sort of 4 to 6 months to get a no and 6 to 9 months to get a yes. And if you say, for example, a restaurant owner, you've got 5 sites, and you're looking, you found the next 2 sites, perfect place for your next opening, and the seller wants to sell in the next 6 weeks, you just forget about getting that loan from your big bank in sort of that time frame. So the sort of gap in the market that we're filling is that we're much faster. I mean, we're certainly not the cheapest. I mean, we're not quite at the sort of debt fund level, which is double digits, but we're not, the sort of big incumbent bank type level in terms of rates. We'd probably be sort of 1 or 2 percentage points more, but it's the speed. And what we find is entrepreneurs are willing to sort of pay that little bit more, but to get the loan, on average, we complete loans in 3 weeks.
Yeah, it's interesting, even from opening a business account, which can take a few months, and you see Tide coming along, and arguably one of their key features is you can open an account in 5 minutes, which instantly gets an inflow of customers, even if they offered just what every other business bank would have.
Yeah, and I think that's also, that's where the technology piece is so important. What enables us to do those transactions in sort of 3 weeks on average is essentially the Acorn machine platform that we built for OakNorth that we're now commercializing. But leveraging big data and machine learning in order to do credit analysis at speed and scale. And that's, I think, a big part of what's helped us be profitable.
But I guess that wasn't there at the start. And my interpretation would be that, you had that group of people who were experienced enough, they could look at all the data and make a much quicker decision, be that expert underwriter / VCPE style thing of yes, no, let's move on.
Yeah, and I think also, it's again sort of bucking, I guess, the fintech trend, because we obviously use data to help inform our credit decisions, but then we meet borrowers face to face, and that part's really important, and that's sort of more similar to what you'd find in a private equity model. We've had situations where on paper we've thought, absolutely, it's a done deal. We're just meeting the team to sort of say hello, and then we've met the founders or the senior management team, and they're completely misaligned in terms of their approach. They don't seem to be singing off the same hymn sheet at all, going in totally different directions. And then equally, you've had scenarios where on paper it's been just about enough in terms of financials for us to feel comfortable, and then we've met the team and been like 100%. There's a brilliant team. They're really aligned in their strategy, and they're all moving in the same direction.
So is your sort of Acorn model machine learning? Is it modelling Rishi and Joel? Are you converting them into some bots?
No, I mean essentially with Acorn Machine, it's sort of, we said this isn't a UK problem. I mean SME lending isn't something that is an issue just here. It is something that it's a challenge everywhere, and so we said if we could sort of package up that IP, that tech platform, and then enable banks and lending institutions in other markets to essentially do what we're doing with SME lending here in the UK in their own geographies. And I think we've been very surprised because this only sort of started we only sort of started conversations in August last year, expecting probably about 80% of the conversations to be with new challenger banks who basically want to build OakNorth in their own country. And then 20% would be big incumbents who want to, make the process more efficient. It's actually been the other way around. About 80% are very large institutions who are saying it's taking us, 9 months to do a loan at the moment. If you can help us reduce that to sort of 1-2 months, you'll be saving us a lot of money and time and resource.
And so is it just the tech, or do you give them the sort of the process and they should come in and meet you and this is how it
No,
would
the
work?
process is totally up to them. I mean, we don't make any, we don't take any of the credit risk. It's we provide them the data and then they make the decision. Their credit team will make the decision in terms of whether to do the loan. So how they do that and what process they might have in place. But a big part of what typically takes very long is the fact that the data piece, the credit analysis piece is what typically takes a very long time.
Okay.
Obviously, they might have processes in place. So, in large banks, obviously they're getting hundreds of applications for loans. And let's say you do make it to credit committee stage, which are the people who make the decision. If you're sort of seeing that one credit committee that's happening that month, and you're not in that batch of 10, and you're not in the next month's batch of 10, and the next month's batch of 10, then you can see how the numbers add up. But I think the biggest challenge is that the same amount of time and money to underwrite a loan of 2 million, 20 million, 200 million. So it's pretty clear where banks will focus their attention.
So does this break OakNorth into two companies, a tech platform company and the SME lending
Yeah,
business?
exactly. So the results that came out this week were for OakNorth. The sort of Acorn OakNorth group, the holding company, that includes the sister entity, Acorn Machine. But obviously Acorn Machine hasn't even had a full year of operations yet, so we don't have results to share on that.
So you're also talking about international, can't even say the word, expansion yesterday. So tell us about that.
Yeah, I mean, that's basically, I think, we've kind of taken a slightly different approach than perhaps the Revoluts, the N26s, Monzos, and so on, in that we said, given our proposition, given our model, we don't think that the most effective way for us to scale is by trying to get a banking license in other markets and build a fantastic originations team and a great credit committee and the whole marketing function. We just said, actually, we think the more effective way to scale is by licensing out our intellectual property, our tech platform, to other lenders. And then, in terms of what we've achieved here in the UK, £1.2 billion loan book in 2 years, the loans have directly helped to create over 5,100 new homes, 4,000 new jobs. You can almost multiply that multiplier effect by licensing it out to other banks so that they can then do the same in their own economies.
It's a really interesting model because we've seen Scalable Capital, I guess, go that route on robo-advisors and then say, actually, we'll partner with banks. I guess we've seen Moven open their own
Cabbage,
thing, and then Cabbage.
Yeah.
It almost seems it's a brand new play in the fintech playbook of actually how do we convince these big players that our infrastructure is right? Well, we'll show you it's right by creating and running a massively successful business. And now you want this, then here's the platform.
Yeah,
to
it's
do
the
that.
opposite of if you build it, they will come.
Yeah.
I think that's it. I think it's sort of proving the concept. Proving the hypothesis. Hopefully, we had no idea that we'd get these figures. We thought that after 2 years we would reach a £250 million loan book. We've reached 1.2 billion, and that's not because we've taken undue credit risk or lent to businesses that we wouldn't have otherwise lent to. I think a big part of it has actually been from Brexit. Sorry to bring that up, but I do think that's been a big part of it because larger banks have retrenched even more from the market than they already were, and as a result, we've been able to gain some of that market share.
And I guess open banking, PSD2, CMA remedy APIs feed into Acorn machines even more.
Yeah, exactly. I think obviously we're not on the data side. We're not a transactional bank. So, but that being said, we are talking to fintech partners. I think Alt5 put out a piece, that we were in Monzo's marketplace for savings. So that is another way, another route. Obviously we offer savings accounts which help to fund our lending. And they'll play a significant role there.
That's great. So is there anything that the audience might be interested in or that you're looking for on talent or customers?
We're always looking for talent. I think any brilliant data scientists. We're always looking to grow the Acorn team, and anyone in sort of business development or sales side. We've just opened quite recently a New York office for Acorn Machine. We've just opened a Singapore office.
Oh, wow.
So we've got 2 people now in Singapore, and we're going to be having one in continental Europe as well. Watch this space and just drop us a line if you're interested.
Well, great, Valentina. Thanks for joining us, and thanks for watching/listening. If you like this, please join our podcast and find that on iTunes at Fintech Insider News. I can't even know what it's called. Fintech Insiders. Wow, when you forget the name of your own podcast, what does that mean? Or Blockchain Insiders, or a variety of other things that we do. It's been great to talk to you today. See you soon.